You know how excited I am about capital stacking, and you know how many people we help with it.
They'll market to you based on score, then you apply, and then they get to see the meat. And then when they see the meat, they'll decline or they'll give you much less than your $30,000 pre-approved credit card. Here's $2,000. So don't buy into that. We have to navigate that with clients a lot where they say, I've got all these pre-approvals, and so don't do that.
You're like me elevated to $1 million. Most people don't know what capital stacking is. A lot of people don't even know what business credit is. Jason, welcome to Business Perfect Formula.
Wow, thank you for having me. That is a heck of an intro.
Thank you.
I am inspired.
Well, good. I'm
And
so excited to have you
Now I'm
here.
nervous.
No pressure at all.
No, that was really nice.
Well,
Thank you.
well, good.
Yeah.
I'm just so honored that you're here and so excited because you know how excited I am about capital stacking, and you know how many people we help with it. But I just am excited to have you here because this is what you do day in and day out. And while I am considered somewhat of an expert on capital stacking, you're like me elevated to $1 million. So I am
No, you are an expert.
very excited.
No, you're an expert.
I'm learning. I feel like I'm learning, and I definitely have learned a lot from you. So today, I'm just so excited to impart that knowledge and just give all the listeners just another tool for their tool belt and something to think about, a new way of approaching business funding.
Yeah.
And what I love about what we're talking about is that it's not talked about. Most people don't know what capital stacking is. A lot of people don't even know what business credit is.
Yeah.
And it should be known. And I feel like that's become my mission. I feel like I want to educate the whole world on it because what you can do with it is so powerful. And when you don't know about it, and no shame on all the other types of funding at all, but I feel like if you don't know about it, you're just stuck in kind of a little box and you are limited in so many ways. So anyway, I could go on and on, that. We'll dive right in. I am going to get into your story and how you started your company and what you do. But the first thing I'd love to hear from you and your different opinion and different way of explaining things is, could you share with our listeners in your words, what exactly is capital stacking?
Okay. Yeah. Great question. So I put together a deck and presented on I guess a couple of webinars or whatnot this past year, unicorns and Clydesdales, just using that imagery to explain capital stacking, and it seemed to be received well. So I'll just use that. Plus, I'm inspired from being on your farm.
Yes, I was just going to say, I love animals.
That's right. So I'm fresh off of your donkey, your dogs, your cows. So I'm feeling farmy, and that's actually, I think, a good way to approach it because everyone can kind of understand those images. So if you look at the more sought after SBA loan, commercial line of credit as your unicorns, and again, we're just speaking in the business finance world, and then you look at credit cards, whether they be personal credit cards or business credit cards, as the Clydesdales. Those are the workhorses, right? Those are the reliable, you know what they are. You can count on them. And they're easier to get. So obviously a Clydesdale is more accessible than a unicorn. And I don't mean unicorn in the sense like it's just a fantasy or it's impossible to get. Plenty of people get SBA loans and commercial lines of credit, but the position that they're in at the time, the financials, everything that really goes into that has to be in place.
Absolutely.
And so I just use that imagery because it is more, it's just harder to attain and capture, if you will. So anyway, starting with those, if you look at the unicorn programs, even if you're doing a startup SBA loan, you still need anyone with 20% or more of ownership has to have solid, good personal credit. Your personal financials and your business financials have to be in order, especially if it's a new one under the SBA 7A program. And you, in many cases, are putting up your personal assets. Not all the time. So it's heavy. It's a tall order. There's a lot that goes into getting approved for an SBA loan. And it's important to understand that it's a loan. So the entire amount is dumped on you at once, and you are on the hook for it immediately, or fairly quickly. And so those installment payments, maybe begin in 30 to 45 days, and then It's for the next 5 to 7 years. With a commercial line of credit, the other unicorny thing, it is maybe more manageable in the sense that you are just given a line that you can draw from, and then you're only on the hook for what you draw down. It still requires really good personal credit, financials. You're really not going to get a startup commercial line of credit. I know that, sometimes certain regional banks will maybe offer up to $50K, and you don't have to be in business you only have to be in business for like 6 months. There are some programs like that, but it's very hyper regional. There's usually a catch or two. And I'm not trying to, poo-poo these things. It's just more of like giving a perspective, like a realistic view of it all. So with those, you still need good personal credit, financials, and then time in business. You have to show some revenue and all that. So that's not just something that you can be fresh out of the gates.
Nope, no way.
Which there are with an SBA loan, true startup ones.
Yes.
But the other thing I forgot to mention is you need a business plan, and an extensive business plan
Yes.
like that with up to 5-year projections. I'm not an SBA broker, so I'm trying to play it safe and just talk about what I know. Now, if you get into the credit cards, everyone's familiar with credit cards, especially on the personal level. Those are so easy to get relatively because you don't have to come with financials. You don't have to have any history, and you just have to have good personal credit. And there you go. You suddenly have buying power. The limitation with the Clydesdale is that you're just not going to get near the size of the funding on a per account basis. So yes, you can even go get a business credit card or a personal credit card. And many people use personal cards for their early business, which is understandable. I've done it. Everyone's done it. But I think it's the big limitation is that you're only going to get X amount, especially if you've got good personal credit, but it's thin. And even if you try to get a personal credit card, you might get $3,000-$5,000. It's like you can only do so much with that. So basically what we do, stepping out that imagery is we turn Clydesdales into unicorns with our capital stacking program because we simply overcome those limitations with really a few things. One of them is we, overcome the limitation of size on a per account basis by stacking multiple accounts to build a line of credit that would then get closer to matching that unicorn commercial line of credit, or even get closer to matching that initial SBA startup loan, for example. Because we are, with just business credit cards, we're getting over $200,000. Not like all the time, but obviously we're reaching, and you've seen it firsthand.
Yes.
So we obviously overcome that particular limitation by, stacking up multiple accounts to reach that aggregate amount. And the other thing we do is we've got a liquidation solution. So what you have with the unicorns of an SBA loan and a commercial line of credit, a lock, is cash. So whether you're drawing cash off that line, check writing line of credit, or obviously cash in your bank from a loan, credit cards are credit cards. They're not necessarily cash, but a couple things to note. These days you can buy so much with a credit card as is. There's really no reason to force cash needs upon a credit card. You should always explore first, how much can I get done as just a credit card? And there's even online portals. There's third-party portals like Plastic. It's PLA.
Forget the Q.
Yeah, see, that gets people. PLASTIQ.com, where you can use that portal. You can use credit cards through that portal to pay recipients that maybe don't accept credit cards.
Right.
So especially in the real estate flipping world, if you've got contractors that, you only want to pay cash, or they'll only take cash, they'll create an invoice through these portals and you can pay them that way. But even aside from that, we have a liquidation solution so that you can convert the lion's share of your credit limits to true cash in your bank account without having to use the cash advance feature, which every credit card has a cash advance feature. But that's basically like getting a payday loan or a car title loan, because the portion that you advance off, basically we call it ripping cash off your credit card, has, even if you have a 0% promo on that card, that portion that you cash advance has like typically a 29% APR immediately applied to it. You also are charged a 3 to 4% cash advance fee on, that's based on the amount you advance, and you're usually only allowed to advance or cash out say 30% of your, and our liquidation solution can go up to 80% or more of your limits, your combined limits. The other thing that's really important with that is the liquidation solution is basically seen as a purchase, so that, it is a purchase, so that you don't create a cash advance event, an advance event that would then trigger all these things that I just explained. You're able to keep your 0% promotional period because we only deal in 0% cards, as you know. So we overcome the cash limitation with that solution, that program. So it pretty much covers it. I mean, to keep it simple, that is how we, turn unicorns into Clydesdale.
I like that imagery.
Strap a horn on a Clydesdale.
I love that imagery
with these, but it's I get it. I totally understand why someone would, at first when they're presented with this solution, be hesitant or just maybe feel like it's more complicated than it is.
Right.
And that's why we really try to,
simplify.
Simplify.
Right. Well, and a few points that I think are just amazing about it, which are my always biggest selling points, is it can be a startup loan, right? And that's the biggest thing that's so amazing, is because banks certainly aren't going to give you a loan if you're brand new and have no financials. This type of funding doesn't require financials. It's one of the few types. So it can be for startups. So no financials. They are 0% cards for, 12, 15 months, which makes borrowing capital very cheap, up to $200,000. And then the one key that you didn't quite hit on that I just love is that it comes as business credit, which that is the big piece, because I call business credit hidden debt. I don't know if that's the right term or not, but
it's hidden from the right people.
It's hidden from the right people. You still have to pay it. Don't get me wrong.
But there are people that see, because there's a whole business credit world. Mm-hmm. It's a whole nother profile. It's a whole nother world. And just even, I'm not going to beat it to death, that imagery, but the other point of the unicorns is it is business debt.
Correct.
That does not show up on your personal.
Yes.
It does build a business credit profile by, obviously utilizing it. But it's a business credit profile that you can, mess up too if you're not careful. So you still got to be responsible with anything that you originate under just the business credit. And that would be anything business credit as a jumping off point is anything that's tied to the EIN of your business. Mm-hmm. Because the employer identification number for an LLC or a corp is basically the social security number for that corp.
Right.
I know there's CPAs that would say that's inaccurate, but it's a simple way for people to understand it.
Absolutely.
I think another thing that people don't understand is like you can literally, when you look at your business and financing it as an individual, or even if you've got multiple players under your company, we look at it in such a limited way where it's like it starts and stops with us and our personal credit profiles. Mm-hmm. But then when you open up business credit and that whole world and profile, you have so expanded yourself.
Absolutely.
You've expanded your life because it goes beyond just your business. Maybe now you've expanded your ability to borrow for your business, but if you are smart with business credit, it can have such a huge positive impact on your personal life because of how you load balance between business and personal credit and get strategic without jumping the wall too much. You can do balance transfers between personal and business accounts to free this up over here. Like I'm going to move my personal stuff over to business. Again, you got to be careful because, you don't want to upset your CPA. And then when you use your personal credit to then maybe, obtain new financing or, personal credit and positive personal credit is can be leveraged in so many ways for access to so many things these days, then you can put, move some stuff back onto it after you've accomplished what you need to. And it's just like this constant like flowing back and forth between your personal profile and your business profile, and them kind of working together harmoniously, that just expands your horizons. Just your whole life, can really, if done properly,
correct,
open up tons of opportunities for you.
Absolutely. And I'm sure there's some people listening that have never heard of business credit and capital stacking, and they're thinking, okay, so I just need to go out and get a bunch of business credit cards, and that's all I can do. I can just do that on my own, which obviously isn't the case. So
Right.
Explain to me, what's the difference with capital stacking as opposed to me just going out and putting out 10 different credit card apps for business credit and just thinking that's it.
Well, number one, you can do that.
I can.
No one's taking that away
absolutely.
from
Oh,
you.
yeah.
You can absolutely
right. But
go
why
apply to
shouldn't
10.
I?
I wouldn't recommend it.
No.
That's for sure. Man, I wish I had a good analogy for this one. I probably, given enough time, I could come up with something. But because it's not, you can have, we do it all day long. We have professionals do things for us that maybe we could do ourselves.
Sure.
I mean, you can build a house yourself.
But should I?
Yeah. Is it going to be to code? Can it hold up in a hurricane or an earthquake, depending on what coast you're on? Like, there's a lot of things that you can do yourself. But is it the wise thing to do? Are you going to get the outcomes that, you might learn a lot through that process, and you might obviously move your own personal needle quite a bit in that. But if you're trying to do this with credit, you're going to have to deal with all the collateral damage of you trying to do it yourself, and that is going to be on your personal credit profile. So great, you went out and did it. I'm sure you learned some stuff through that process of DIYing it, but now you have to deal with the damage that's been done, and so that takes a lot more time to clean up, and you ended up not getting as much as maybe you needed. So the whole point with going with an expert is, just like with any other field, is you don't have to rely on your own trial and error, all the collateral damage. You can rely on someone else's expertise and get the best outcomes, because we really, going with us, our team, will provide the best outcomes for that very unique program. We've just been doing it for so many years. We've seen too much, almost like, what's that, double-blind trials, where, basically we've seen too many people get a review from us, go out and do it themselves, and then thankfully come back to us and are actually very open and humble through the process, to where they share what happened. And so we get to take that information of what did happen for someone that didn't use us, went on their own, and obviously we then can't take them through the process because they wrecked it.
Right.
But we can look at other comparable profiles, other comparable situations, and know that, we could have got you this. And we could have technically, most of the time, we can get, depending on the scenario, like 3 to 10 times more than if they did it themselves. Because if you, for example, you're starting a business and you open up an account with Wells Fargo, a business account, they're going to offer you a line of credit, like the one, a commercial line of credit, and a credit card, a business credit card. Both of those are not going to show up on your personal credit, but they do require strong personal credit. And they're going to give you, even if you've got great personal credit, they'll give you an $8,000 business credit card and maybe a $3,000 to $5,000 line of credit. It could converse that too. That's it though. Great. Use those, and then ask for increases every 6 months. Don't be late, like all that stuff. And you could turn that into something sizable after 5 to 7 years, as long as you're also showing financials and all that stuff, and you could step that up. But you just kind of tied a hand behind your back because you started small. And now you've got that much more distance ahead of you. You have that much more space to fill.
Right.
If you go with us, you start bigger.
Right.
You have less distance to the next milestone. You have less, you just have less distance to that next level of funding that you might want to get with maybe your local bank, where you have a business account, you've got deposits, things are finally hitting, and now you can, get maybe an SBA loan, maybe something that's collateralized, maybe a true commercial line of credit, but you can't even like entertain that until you've taken care of everything prior to.
Absolutely.
The levels, the foundational stuff. So yes, you can go to Wells Fargo, you can get those two things. I'm not saying that people couldn't go out on their own and do this stuff, but that same person maybe would respond to a pre-approval offer as well, and they'd get, maybe another $3,000. At the end of the day, they're still like sub 20K, but that same person, we could have got 80,000.
Capital stacking. Right.
So, you've got like a $60,000 delta. And
Big
I'm not
difference.
just throwing numbers around. I've been in this long enough where I can say from, so much experience that that's just the way it is. And so it is worth it to pay for services that are going to make funding available, buying power available that just would not be there
any other way.
Absolutely.
Other way. It's very true. And that's what's so amazing is we're able to help people that couldn't get help any other way.
That's right.
In this manner,
That's right.
That's the power of it. That's what's amazing. So I am curious, and I guess I should preface this with, not everybody knows how we work together. So Jason is co-owner of a company that specializes in capital stacking. And together he funds our clients. And, some weeks there's several $1 million worth of funding. It's pretty powerful. And so, we have a great working relationship. What his company does is absolutely amazing, and they operate very differently than a lot of companies out there that do this. And I know because we've been approached by them, and I've heard horror stories from a lot of clients that have gone, other ways and tried these other companies. But what I'm curious, because this is something you and I have never discussed. You and I are in an interesting industry. People assume when you say you deal with finance and funding, oh, you're like slimy. They think
Totally.
you're yucky, because there's a lot of people out there that build that bad reputation, So I knew that going in. I knew that it'd be an uphill battle to kind of not prove myself, but just establish credibility and trustworthiness. So I'm curious. When you started your company, knowing what you wanted to get into, what made you want to do it? First of all, because it's diving into that industry that's questionable.
Yeah.
But also, what made you want to dive into specifically providing capital stacking? Like, what was that appealing draw for you? Because it's very unique.
It is. I think some of it, honestly, is just my wiring.
Yeah.
It's not because I love shortcuts. I mean, I think I love hacks.
Yeah.
And I just love anything out of the box to solve a problem.
Yeah.
I'm just so drawn to. And I spent a lot of time in the business finance industry outside of the actual funding. I was in more of the marketing side of it. So I became really familiar with, business finance and all the, the different facets of it. But when I came across capital stacking from that still more of an outsider point of view, I was just enamored with it. I'm like, what is this? And it's so funny how, I've been seeped in it. I've been neck deep in it for so many years. You lose sight of how unique it is. But
right.
But when I can still touch back to years ago when I was first exposed. I do remember like, what the hell is this?
Yeah.
This is crazy. And I guess just to maybe support that, the other program that we do and did more of is that you're familiar with is the 401k rollover, which is the IRS calls it the ROB strategy. It's rollover for business startups. We call it BDRA, Business Directed Retirement Account. But see, that's another out of the box thing.
Correct.
That's where someone can take their 401k, money that they've built up. Typically, it works best for, someone with sizable 401k funds, and maybe they've worked for a large corporation for a while. We've had a lot of franchise clients that use that. But, it's a way to deploy your retirement funds towards investments that are still all about your long-term retirement. But it unlocks it in a way that's just so creative and so unique, and works within all. It's still compliant with the IRS, Department of Labor, ERISA law, all that. But it's a hack, so it's a legitimate hack. Okay, maybe that's what I love, the legitimate hacks, and that's what capital stacking is.
It's a legitimate hack,
and so you're getting an advantage. Like you're shortening the distance substantially, because there is a more organic way to do all this stuff. I mean, there's still always has to be. You always have to have time. You always have to be willing to put in the time, be patient, build with your personal credit, with your business credit. It's not like that still isn't in there, and you still have to be responsible with it. You still have to be connected to it. But this just greatly expedites the overall process.
Absolutely.
I mean, and so I was just so fascinated. Like, how do I get involved with this? So things just happen to work out with, circumstantially, to where I was able to get more down in the weeds with it, learn more of the mechanics of it, get more in the brokering side of things, and not, just be in the more marketing, kind of lead gen side of business finance. And then, from there, my partner and I rolled out from another company and started Capwell. And we were just like, okay, we love this program. We've seen how effective it is. We've seen it shoulder to shoulder with other business finance programs under a large roof, if you will, that previous company. And it just outshines.
Dominates.
And we're like, okay, we're going to take what works and we're going to start this company.
Yeah.
And so that's when we started Capwell. And I think what, at least our version of success is attributed to us not trying to boil the ocean and really staying focused. And it's like, we're doing capital stacking and that's it. We're going to resist the temptation to, provide more, step on people's toes, but we're still doing the BDRA too.
Yeah.
But that's the thing, is they're so niche.
Yep.
We're not, that's another thing too, is we're not, there's competitors, but it's not an oversaturated market like merchant cash advances.
Oh,
holy cow. Remember when 2008 hit and the, mortgage bubble burst? Suddenly all these mortgage brokers needed work. And so there's this huge migration over to merchant cash advances, which, if you want to talk about slimy,
that could be a whole other podcast.
I know some stand-up people that do merchant cash advances. There are some,
I will admit, but a lot of them, it's all about how much can they make off of you. And then you and I have I've seen the flip side where the client is just drowning because of them. That could be a whole other podcast, but agreed.
And I'm not trying to, make myself look squeaky clean
not at all.
And compare. It's just more, and here's the thing. We're in the credit game. So I know for a fact, just honestly, some of the people that we get credit get themselves in trouble with it.
Of course.
They're going to run up those.
Absolutely.
And the business doesn't work out, or they're irresponsible with it. Or we've had people go to Vegas. Like, what are you doing? Don't do that. And, we really do try to vet that through the process that, these people have, they've got a plan. They understand the scope and the liability, and they can respond. You never know what's going to happen in life, but at least we try to vet out that we're equipping the right people. But I know it's just, it doesn't happen all the time. So I know there's going to be those folks that get in over their heads. But here's what's crazy is we just don't hear from them. So I have to assume, we follow up with some of our clients, and we do have a lot that come back to us for a second and third round, right? But you know how people are. People will find, they need someone to blame.
Absolutely.
And so if we help them get this credit and they got themselves in trouble, I got to be honest, I'm shocked that we haven't heard from more people that said, like, you got me into this. It's like, no, you did. But we don't even have to deal with that. I don't have people. Do you have people coming back to you?
I don't. Most people are responsible. They come into it with a plan. I don't have that. And
Yeah.
most people, the ones that come back are like, you changed my life. Look at what I did with
Yes.
this. Help me prepare for round 2.
Yeah.
Like, that's what I get the most of.
And
you
I
know?
think, again, taking more of maybe a sobering note here is that even the people that maybe the business didn't work out, or they ran into, things outside of their control. I think that they knew what they were getting into, and they knew the risks. And so they can't blame, us or anything or the lenders
Right.
or anyone, really. It's just, and that's what comes with truly being an entrepreneur, is you have to be able to kind of
Absolutely.
live and die by your decisions.
Absolutely. I guess let's start at kind of a basic level. We've talked about what capital stacking is. We've highlighted some of it. But really, some of the main things we talk about, it doesn't need financials. It doesn't take collateral, all the usual things with a loan it doesn't take, which makes it unusual.
Right.
However, it does instead look at your personal credit.
Yes.
So let's dive into a little bit. I would like to dive into what's required, but also I think it's really important because I'm a huge proponent in people understanding the value of capital stacking. And if you're considering opening a business or growing yours and you know you're going to need capital, I think that it's important to understand there are steps you could take now with your own personal credit to get yourself ready for better results. So if you don't mind, if we can kind of dive into a little bit, what's looked at on the personal credit side and what things could you do to get the best results?
Yeah.
That's a loaded question, I know.
No, it's the question, honestly,
Yeah.
because everything starts and stops with personal credit. Even though it's a business credit program and we are getting, our clients true business accounts like we've been discussing, it is all about your personal credit profile. Now, having an aged business where the EIN or the LLC is over 2 years old, seasoned, that helps. But
Yes.
that doesn't get you approved where you wouldn't get, you know what I mean? Where
Right.
it helps is it'll get you a larger offer.
Correct.
For example. And it could be that little edge, that little tipping point if you're borderline. And then also, like we talked about, if you've developed business credit, that also helps on top of just age of your business. But again, it all comes back to whatever your scenario. It comes back to your personal credit.
Yep.
So, and as you and I talked earlier, we unfortunately have to say no to people with strong scores,
Yes.
but thin credit. And everyone should be proud of their score if it's high, and they should be inspired by their score if it's low to work hard at getting it
Absolutely.
high. But the score opens up the door for us to just review. This is just to even look at it. And that's why we call it a 680 plus program. And if their score is below 680, the only reason we'd be willing to review it is if they're overutilized, but there's nothing else negative.
Right.
But if they're maxed out on their current cards and that's what's got their score way down, because that could really, drop it, we'll look at it and let them know what they need to pay down. So, but the score, and I understand why people get hung up on score because so much marketing is based on score. Housing, like borrowing a home,
Everything.
is based on
Yep.
score. Buying a car is based on score. But those are securitized. That's a different form of funding.
And that's what people need to understand.
Oh, please
Because
understand.
when people get the denial, they'll say, but I just got my house loan
Yeah.
or I just got a car.
Right.
What's wrong with you?
Right. It's because it's
Different.
secured by a home. It's secured by a
Correct.
car.
Correct.
This is secured by air.
Air.
That's it.
It is.
And so the only thing that an underwriter has, that a lender has, is that profile.
Right.
And so I would say don't fixate on score when you're exploring our program. Fixate on your profile because that's what matters anyway.
Correct.
I mean, sometimes your score is overinflated. So don't let that go to your head.
Right.
Because your score is it's higher than it really should be as far as, and sometimes it's lower than it should be because we know it's not a perfect algorithm and just how that works. But it's the meat of that profile. And that's what we look at. And that's really all we care about.
Yep.
So we use the score as a filter just so we're not, totally inundated and overloaded with submissions. So when you get reviewed, see the value of it because we're taking a look at the meat And if you don't qualify at this time, you'll at least know why. And there's things that, you'll have, especially with your team. You guys really help them with those action items that need to be addressed. And sometimes it's just a matter of a few months and you're ready to go.
Correct.
It's not like, this program isn't available to you for years. It's like, it's a really short-term turnaround for a lot of people. So as far as the meat goes, you need depth because we're going for business credit. And so business credit lenders are they're looking for a different sort of borrower, someone that can manage a business, someone that can handle more than just their personal life. They can handle a business life. They're looking for people that have proven they can handle multiple types of credit, not just revolving, but also auto loans, mortgages. Now, again, we get people big results who don't have a mortgage on their personal credit. But I'm just saying, the more depth you have, the more that you can show your management of credit in general. As I said, like there's installment loans, like a car payment. There's revolving, like a credit card. You can show some diversity. You can show some time that you've been able to, like, look, I've had this credit card for 4 years. I've actually used it and I didn't default, so clearly you're lower risk.
Yep.
And comparable credit's important too. So since we're going for revolving credit, we're going for credit cards, business cards, you need to definitely show that you've been able to handle revolving accounts under your business profile, personal profile. So time, capacity. So the size of the accounts, especially again with the comparable side of credit cards, you got to show that I've been able to handle a $10,000 credit card, and I've been able to get the balances up to $8K, $7K over time. Who knows when that was?
Right.
And I never went late. I can handle it. It wasn't like I just got a $10,000 card and it sat vacant, just empty. You need to show that you've pumped some blood into it. You've used it. So, capacity, usage, comps, that all just needs to be there.
Absolutely.
And so when someone does get denied by us, it's just for our program. It's not like, we're not the lender.
No.
Right? We just know that we know what the lenders are looking for. Someone gets declined and they have a 750. Don't take it personal. Your 750 is great and you should be proud that, you have that, but that's not really what we're looking at. And so kind of let go of score.
Right.
And let us tell you what we can get for
Correct.
you or what we can't. But there's always going to be value through the process of even our review because you'll have action steps. What did I miss?
One thing that you gave me this tip on the way over here, and I love it. So let's talk about capacity for just a moment and comparable credit. Let's say, for example, I've been using my card. I've been responsible. You gave a tip in terms of getting credit line increases that I didn't know about.
Oh, okay.
That was about, when you log in, if that's there.
Yeah. So, you're going to have login portals for all your cards. Mm-hmm. This is personal credit. Everyone's got this. When you log in, there's always going to be an area under your account management where you can request a credit limit increase. And as long as that's available to you, and you request, there won't be an inquiry. Yeah. The inquiry would come when, maybe you get an offer in the mail or, they'll maybe give you a soft pre-approval, but then the final decline or approval is a hard inquiry. So there's that. You got to be careful with all those credit card offers in the mail. Those are just marketing offers, by the way.
Yes.
They're based on they scraped your score. That's just score based, and that's the problem. Because what happens is they'll market to you based on score, then you apply, and then they get to see the meat.
Yeah, and then
when they see the meat, they'll decline or they'll give you much less than your $30,000 pre-approved credit card. Here's $2,000. So don't buy into that because we have to navigate that with clients a lot where they say, I've got all these pre-approvals, and it's like, don't do that. Anyway, that again just goes back to the value of our review process. But if you have the opportunity, if it's available to you to request a credit limit increase in your login environment, that will not be a hard inquiry. If you call your rep for your credit card and you request an increase that's not available to you, and they run you through underwriting, then yes, that's going to be a hard inquiry. So just be aware of the difference between those two things. But as far as playing that game of soft inquiries or getting increases, you want to make sure that you give it some time. So you can't like get a new credit card and then, the next month ask for a credit limit increase. You got to use it. I say go in 6-month chunks and use it and run it up. Like, be careful. If you have a balance over 50%, don't let it sit at that for more than 3 billing cycles. Pay it down, and don't request a credit limit increase if you're maxed out on both the card that you're requesting, but also on other cards. So if you have other cards that are maxed out, they're not going to give you a credit limit increase because they're going to look at everything else.
Right.
So you got to make sure that your credit's like in okay shape when you're asking for these increases. And I think we've talked about this before, but just from a visual standpoint, think about skyscrapers over suburbia. When you're building your personal credit, it's not about having 15 credit, revolving accounts with 3 store cards and 12 credit cards that are all like maybe low limits or lower limits. Don't do that. That's sprawl. You don't want that. You want to have a handful of super strong accounts. So, I've seen people with like mega credit where they do have 15 credit cards, but the average limit's 30,000. I mean, those are
rare.
I don't see a lot of those. But, think in terms of 3, at first, especially if you're trying to develop a thin profile. Think in terms of 3 really strong personal credit cards and build those up. Take the time to use them, pay them off every month if you can, or just don't let it go too long, with it being maxed out. And then continually request limit increases. I mean, you could try in 4 months.
Yeah.
You don't have to wait 6 months, but just keep hitting it. As long as it's available to you, you're not going to get an inquiry, and just keep building up.
Building up. That's the key.
Don't stop saying
stop going
yes
sideways.
to all these pre-approval offers.
Yes.
I would even resist the store card because they're going to say you'll get 20% off if you apply right now. Don't have more than 3 store cards. No. Please.
Scattered debt.
That's right.
Those reviews with people get so mad. What's scattered debt? I'm not throwing debt. What's scattered debt? I see that a lot. Scattered debt. Yeah. So, you kind of touched on this a little bit. So another great thing about capital stacking is that you can essentially, for people that have multiple entities, you can build business credit with each entity.
Yeah.
You can do capital stacking with multiple entities, not at once. You got to spread it out. But for the savvy entrepreneur, I've seen them use this strategy where they'll, in several years, they'll accumulate several $100,000 because they've done per entity. But I'm curious from you from a kind of the standpoint of strategy. So let's say I'm an entrepreneur. I did awesome. I got $200,000 with capital stacking. And then, I want to maximize. So I have 3 more LLCs that I'm going to eventually use. What advice would you give me, on how to smartly use that capital stacking now, but then what's the strategy to then come back and keep building? What's kind of that secret sauce there?
I like probably 9 to 12 months.
In between.
Yeah.
Yep.
If you can. I'm assuming that you're, maybe to simplify, you're talking about a single owner operator.
Let's simplify it with that. Yes.
Yeah, single owner LLC.
Yep.
And so they're going to keep using their Social Security, their personal credit, to co-sign with these EINs and get subsequent rounds. So we do multiple rounds under one LLC, and so we can get you a round of funding, and then come back in 9 to 12 months, and we'll do another round under the same one. But there's a diminishing return. If you want to come back and do, you know what, you could probably just wait 6 months if you're going to do a different LLC. Yeah, just don't. If you do max out your business credit, they'll see that.
And that was my question.
So you got to be careful there too.
Because when you're looking for another round, they'll see what you've spent on business credit side. So
yeah, it's more forgiving,
right?
Because in the business world, they know that people are going to run a
Absolutely.
really high balance, but then typically pay most of it off because they're just waiting for those receivables to come in.
Absolutely.
So it's weighted differently.
Mhm.
It's seen differently, and it is more forgiving than personal credit, which is good, but you still have to be responsible with your business credit.
Absolutely.
So you don't want to be maxed out and then try to come for a second round. It's just not going to be, the results are going to be restricted from that. So yes, you can do multiple LLCs, multiple EINs over a period of time, but even that diminishes if you're just like one person that keeps putting their personal profile up with a fresh or another business profile. So yeah, maybe 3 entities over a couple years,
right?
A few years. But yeah, I've seen
them do it, or where we get really creative, because I'm like a puzzle. I put puzzle pieces together. I like it when there's multiple owners. They both have good credit, and we have 2 different LLCs, or we have spouses. I'll do one spouse does it now, the second spouse comes back later, or does a different LLC. There's all sorts of ways to make this work in your favor. And one thing that we didn't necessarily touch on is capital stacking is not industry specific. It's not like you get it and you can only spend it on buying construction materials.
Right.
You can use it for anything, absolutely anything. And of course, it'd be an accounting nightmare, but you have multiple companies. You certainly could use it for multiple. There's no limitations. So, you and I have seen people getting creative. I have a lot of real estate investors using it for the down payment, for the rehab. We have obviously business owners starting a business, buying a business, building a business. But then what I've been seeing that's even crazier is, I've got some clients now that are using it for crypto. I mean, there's just, and why they're doing it is they're realizing, okay, if it's at 0%, I'm borrowing it at a very affordable rate.
Yeah.
My return can be tremendous. And there's no way I can do this with any other type of funding. I mean, you can't. There's no way. No. So it's all in how you look at it and realize, what can that return be? Does it make sense for me to borrow that $200,000 if I can turn around and make, $500,000-$600,000 off of it?
100%.
Absolutely.
It's all about ROI.
Absolutely. And that's the bigger picture people need to see. So speaking of how people use it, I'm curious, you've been doing this long enough. Can you share, is there a memorable success story that stands out for you of maybe a business owner that used capital stacking and did something maybe unusual or great with it, or even just a client that was
when
great?
You help so many business owners, it becomes a blur.
I know.
Yes, the answer is yes, but I'm 52. So
I'm catching you.
I've forgotten a lot more than I remember.
Right.
Because my hard drive just has to dump stuff. But we've helped. But that's the thing too, is I'm really proud of our diverse portfolio.
Absolutely.
Because we've helped people in tons of franchise brands start a franchise. We've helped people brick and mortar. We've helped people do online, purely online stores, web stores, Amazon stores. We've helped people do crypto.
Absolutely.
I've actually used capital stacking to do crypto myself, and real estate. And so the big one though is real estate. Like
absolutely. Lately, it's been real estate.
It's huge.
It's huge because it breaks that barrier. Everyone's barrier is that down payment, and it's the way to get around it.
Right.
And it makes sense. That's the thing. It makes sense. If you're doing, a flip, or you're, absolutely, it's easy to turn around and pay it back. And that's the biggest piece why people are like, light bulb moment. Yeah. This is amazing for real estate.
I would say that my favorite stories are the ones that are small.
Mm-hmm.
We have some, some really impressive big stories,
of course,
in the real estate world, and even multiple franchise locations and whatnot. But like, I know we've had like a dog groomer. She was able to buy another truck, and we heard back from her later, and she was doing great. It's like what she wanted, and
absolutely.
But she was also doing, I forget what she was. It got her out of something that was just soul sucking, and so she was able to be with animals and do what it was life giving.
Yes,
but she was doing well too. She was more than making ends meet. I always remember a couple that started a pokey and Hawaiian lush ice business in Davis. They were one of our early ones, and they were a testimonial. I think they're on our website still. It was a long time ago. But I will always check in with them. Sometimes I'll just be a creeper and just check, and other times I'll hear from them.
Yeah.
But just to make sure they're still in business,
Yeah.
and they are, because look, restaurants, that's tough.
Yes.
And so the fact that, we got them, this was years ago, we got them, I want to say 60 to 70,000. It was instrumental in them.
Absolutely.
And I forget, it was husband and wife. They were working it together. I can't recall what industries they were both in prior to that, but it was a dream. And I think they did multiple locations, but it doesn't matter, because that their restaurant was just doing really well in Davis. They were filling a need. And so Zuma Poke and Lush Ice. So I think they did like Hawaiian shaved ice, but with booze. And then they also did Poke. Anyway, I hope they're still in business. I don't think I've checked for like a year, but
I agree with you. Those are the ones that mean a lot to me as well. It's when you're just drastically changing someone's life, and they had no way of doing it any other way, and it's amazing to watch. Yeah. I love it, especially when they're getting out of a soul-sucking job and able to
that's more powerful.
Live out their dream. I love it.
It's not how much money. And you've got a ton of impressive.
I don't pay attention to
people
those.
that do the real estate. How much they made. That's great.
That doesn't impact me. Impacts me is when I have changed your life and you are able to say,
that's right.
Look at what I'm doing now and what I was doing then. Like, I couldn't have done it without you. And that to me is way more powerful than, hey, I got someone 220,000 last week. Like, those are the stories, they stick with you.
Are we going to cry right now?
I know, it's getting
I feel
emotional.
Like a little moistened.
But it is. And that's...
No, that's true. That really is it. 100%.
We've talked a lot about how powerful capital stacking is. We've talked a lot about, the requirements, the strategies. And I'm sure there's some business owners listening, or even, dreamers listening, thinking, okay, that sounds so amazing. I don't have good credit. It's going to take me a while. There is that little thing called a credit partner.
Oh, yeah.
And so that's always my saving grace. Is I love talking about credit partners, which is, I'll let you explain what it is, but I'm curious, what's your thought on using a credit partner?
Well, credit partners are 40% of our business. So that's not little.
No.
It's huge. That's when maybe the person who's the primary operator of the business doesn't, have the personal credit to, support our program or get the funding at that time. They bring in a credit partner who does have the personal credit that can support business credit. And so that could be so many people. But obviously, the criteria is it's someone who believes in your business. And that's, not blindly, but someone that knows, that understands there is a level of liability because they are putting their personal credit up. Now, here's the spectrum of that. So a credit partner can be a spouse, a parent, an aunt or uncle, another business partner who maybe isn't as involved with this particular business, but is still passively involved. And so there's like joint liability agreements that you can come up with, if you want to keep it more formal. And, we've had people just offer a stake in it for the value of someone's personal credit, kind of co-signing with the EIN. But most of the time it's very personal. It's a family member or a close friend that's willing to put it up. But we make sure that we go over the implications or the potentials, the liability that's involved before we would move forward. But man, so many credit partners over the years, and it's worked. It's an amazing option, that we've been able to, make work.
Absolutely. And you've even utilized it yourself, which we will get into.
Yeah,
we're gonna do a separate episode hearing your entrepreneurial journey, but I know you have a personal connection with capital.
I've tested most
partners.
Aspects personally.
I know you
of
have
our program.
And that's what makes it more powerful. Is you've seen for yourself what this can do, and that's what makes you a true testament to capital stacking.
Yeah.
We could have this conversation all day. I love talking about capital stacking. However, for the sake of time, we're going to start wrapping it up. But before we close, I'm just curious: are there any lasting, perhaps bits of advice or words of inspiration you might have about capital stacking for anyone.
Well, again, trying to see it fresh, it's um it's such a fun hack. Like
Mm-hmm.
it just opens up so many more possibilities to people. Um Look, we we've got some systems in place in our country that everything's got two sides of the coin. It's got a light side, dark side. Every system's got, pros, cons. But just like this whole idea of corporations being an entity that started years ago, where that entity actually was given more privileges than a regular person, that has created, some people would say, a capitalistic environment that's
Mm-hmm.
abusive. That was created monopolies. That's created like a lot of the big business abuses that we've seen, and so I get it. Like we know what that can do, but the light side of that is for the individual entrepreneur. They can take advantage of that thing that these megacorps have been taking
Yes.
advantage of forever.
Yes.
And that is that go file an entity. Now, don't be reckless about it, because when you do file an LLC and you get an EIN for it, just for example, every state's a little different. You now do have a responsibility for that entity to file certain things on an annual basis to stay on top of it. So just know that you now have extended yourself in some way, but you've extended yourself in a good way too, because you've just greatly increased your overall territory that you can explore, that you can leverage for just a better lifestyle. So yeah, been a bunch of abuses with megacorps, but take advantage of the I forget what it's called. I know the term, but it's basically the autonomy and the personification of corporations is now you're creating a brand new entity. So you've more than doubled yourself, because otherwise you'd be walled in by your personal credit profile, everything personal. But when you have opened up a whole new business world, there's so much that you can do with that. So, just be methodical about it, but take advantage of the fact that just one person can go get an entity, go get business credit, greatly expand, because if you got good personal credit, you're going to get much higher offers on business credit than you would on a personal credit card.
Absolutely.
So do it. Open it up.
Mm-hmm.
Do capital stacking. Cash out. Invest. As long as it's got an ROI. I am not anti Dave Ramsey, but I don't love the guy, because here's the kicker. This hit me one day because I remember when my wife and I were struggling in our early years, and I had become, more aware of business financing and that there's a whole nother world out there. We were going through the Dave Ramsey program because we gotten ourselves in trouble. We were strapped. And look, I'm not saying that doesn't work for a lot of people, but I don't think it's responsible to act like it works for everybody. I don't know a better way to put that. But anyway, we're driving down a freeway in Southern California, and it just dawned on me. And I think we're talking about the program, and just only nothing on credits,
Mm-hmm.
and credit's bad, and all this stuff. And I said, "Hun, look around you. Look at everything on the right and the left side of this freeway. 80% of it would not be here if it wasn't for leverage and credit.
Yep.
All the commerce, all the activity, all the cars you see around you. If this world was a Dave Ramsey world, it would be like cart and buggy. Like there just would be nothing around us."
So true.
And it's like, is that where you want to live? I mean, sure, there's, like I said, there's abuses, there's too much, maybe there's too much commerce in some ways, but it just wouldn't be a reality without leverage. You
Absolutely.
have to leverage.
You have to get, yep. Absolutely. No, thank you. And Jason, thank you so much for your insight today. It as always, I learned some new things from you. I feel like I know a lot, but then I hear you and I learn so much more, and then I feel like a kindergartner almost. So thank you. And I hope for everyone listening that this just gave you a new way of looking at leveraging credit, and also helped you understand the importance of your own personal credit. But just opened your eyes to the possibilities of an entirely new way of funding that both of us have personally seen well, by now you've probably seen thousands of entrepreneurs take advantage of, change their lives, create empires, create something small. It doesn't matter. It can be done, for anything. So thank you for listening. We will dive into much more about capital stacking on future episodes. But for now, until next time.